that there is a separation between, the voice of the common shareholder in these companies and the direction of the companies. But I think it obscures what's going on. Chamath, I totally agree with you. If you look at usage, the number of customers walking into the store, Snap's gone from 265 to 360 million DAUs. Twitter, 190 to 240. Meta, from 1.8 to 2 over the course of the last 3 years. They're all growing. More people are walking into the store and using the service. The story here is all about pricing. How much is each of those users worth? I mean, Apple is the apex predator of this entire market. We wouldn't be having this conversation but for the fact that Apple's changes with IDFA literally pickpocketed the industry $2 billion this year under the auspices of privacy. And so if you look at these companies, usage up, pricing or ARPU down, okay? Recently, Apple's come under a bunch of pressure, so now they're out with SCAD 4, which is their update to the ad policy post-IDFA. That allows you to target advertisers or individuals with 10,000 attributes instead of 100 attributes. So we're going to see some realignment. I expect that the real question is what happens to ARPU next year. But to me, the story here is that the usage and the health of these core platforms is remarkably sticky.
Yeah.
For all the things we say about Instagram, I mean, TikTok has had explosive growth, 30% growth each of the last 3 years. But even the incumbent platforms, really sticky usage. This is about how they're monetizing those users. And the real story is Apple.
Yeah. And for people who don't know, IDFA is the identifier for advertisers. Some people refer to it as MAID, mobile ID, ad ID. I'm sorry. And so what that does is it lets you track a user anonymously across
Brad, have you ever owned
and then attribute any clicks to a sale.
Brad, have you ever owned Snapchat stock?
No.
Why not?
Certainly, governance is a key component of it. But the second thing is,
like, do you have any belief that you could even get a meeting with the CEO and management where they would listen to you appropriately?
We've certainly got meetings with management before, so yes, I believe we could. Whether or not that impacts, how they build product, how they run the business, the influence, etc. But again, I think that's not really the problem here. But the point I would totally agree with you on, Chamath. We've had 10 years of where the cost of capital was zero. 10 years of hypergrowth for these social networks, right? In each of the last 5 years, Facebook has hired more people in each of the last 5 years than they had 10 years after the company was founded. Okay. So as we've seen this growth begin to turn over, I have seen the companies really slow to react, to right-size their behavior that they had over the course of the last decade, to put themselves in a position to compete for the next decade. So it's one thing just to throw your hands in the air and say, well, this is all Apple. We couldn't do anything about it. But we really haven't seen leadership in terms of cost control. We really haven't. We all know these companies
Snap
could
did
run.
Of the major companies, Brad, Snap did do a 20% RIF. They had 6,000 employees or so, and they cut 20%. Facebook is the one that's perplexing because they seem to be massively overstaffed, as you talked about, and they have been massively. They've had a massive decline in their stock price, and they are the one who is affected most by what Apple did in terms of app tracking transparency.
I think that there's a perception, though. I mean, I'm still stuck on this issue. I really think that stock prices tend to ebb and flow based on sort of like friction or momentum. And when there's momentum, more and more people can easily underwrite it. And when there's friction, fewer and fewer people can underwrite it. And so I think that if you are a CEO of a public company, you have to think about how many headwinds do I have and how many tailwinds do I have all the time. And some of them are in your control and some of them are not. At least in the case of Meta, as with Apple and Google, Meta is forced to copy the best decisions of these bigger companies. Why? Because they were one of those biggest. Now, they may have been the smallest of the biggest, but it's going to be very hard for Meta eventually to not converge on those same set of decisions. And the most important one is what Brad just alluded to, which is that there was a point in 2016 and 2017 where you literally could not give away Apple stock. And the big turn of the dial, and some say it was Carl Icahn, who knows, was this theoretically this famous dinner that Carl Icahn had with Tim Cook, where he laid out a plan. And it's like, listen, you need to start managing costs better, managing OpEx better, return a ton of cash, buy back the stock, and you'll be a darling. And Tim Cook was rewarded. And he's been rewarded with an incredibly performant company. And so, Google is slowly inching towards that plan. Microsoft is in that plan. And so the only big four horsemen that hasn't really gotten the script yet is Meta, but they will. We're just debating when. And so there's a perception that, Meta will copy what the rest of these big guys do. But these other long tail companies, the headwinds are just greater. And so when you don't have a company that can be broadly owned by intelligent, thoughtful investors, that's a headwind, right? When you give nobody votes, that's a headwind. And so that's why you see a company that's continuing to grow impact, not being able to translate that into economics. And if I were the board of that company, that should be a wake-up call, because eventually that'll flow into the morale of the employees and the ability to retain, and then the ability to invest in the future. And I think the simple answer is enough with all these, gymnastics around control. If you looked at Elon, the most incredible thing from day one was there's common stock, and his whole thing was like, I'm just going to do the best. And you know what? If I'm not the best, I'm going to be out.
He literally said, if you guys want to vote me out, vote me out.
Vote me out. He's never, ever played these games. So in this funny way, control is a symbol of a lack of ability to run the business. Masterful mastery of a business, you can translate that to being, I'm just going to have common stock.
Well, I mean, so if you think about the historical argument, by the way, tracking back to the high voting class for founders, was that they would be challenged by the investors in the market. And you can see the things that Carl Icahn and others ask for. They say, we want to see you cut OpEx. We want to see you pay dividends. We want to see you buy back stock. And we want to see you grow. And so the trade-off then in the mind of a founder that started this business and scaled it to billions in revenue is, well, that means I've got to make short-term decisions over long-term decisions. I've got to I got to give up some of my long-term opportunities to trade for my short-term opportunities. That was the argument, I think, originally for the voting class. And you can read this in Google's founders letter as well. Does that not apply anymore?
The founders at Google don't even show up at the company. Why do they have to have super voting control? They don't probably even know what's going on inside the company.
But let's talk about that argument. I just want to hit on Zuck's point, because Zuck has said, look, this VR, AR, metaverse stuff in the future is everything. This is where I want to invest our resources. This is where I want to invest my time.
But look what happened. They made a missive. They said, we're going in this direction. Investors, really smart, thoughtful, supportive investors, including Brad, were like, hold on. Check your role. And they capitulated. Now, to your point, did super voting control come into play there? No. Of course he could have said, you know what, guys, pound sand, I'm going to do what I want. Instead, he's like, I'm a smart guy. These guys are smart guys, so I'm going to make the smart decision. So in my opinion, all of these things are red herrings. These are indirections, right? So this idea of I'm just going to take my toys out of the sandbox like a crying baby is what super voting control means to me as a shareholder.
Brad, do you think the era of super voting control for founders taking companies public is over?
Nope.
Should it be?
I think it's, again, when Facebook was doing really great and Snapchat was doing great, nobody complained about super voting stock. Okay. So I think that, my preference would be that I partner with a company where I know the founder, whether irrespective of their votes, right, listens, cares, and has the mental flexibility to make course corrections, right? And the reality, what I'm trying to point to, we have lived through a decade of excess. Everybody knows all these companies could do exactly the same revenue. David, this is the pushback to your point, unlike what the Google argument was. Exactly the same revenue with vastly less investment in terms of people, et cetera, right? A 20% RIF at Meta would literally only take them back to where their personnel expense was in 2021.
Yeah.
Nobody argued in 2021.
They've said they were going to do this too, Brad, right? And it just hasn't happened yet.
This is part of the problem, Jay Cal. Everybody, so why 10%? Why 10%? You've doubled the number of people working in the business over the last few years, right? There's nothing magical about 10%. The real question is, what is the optimal number of employees to produce the best outcome for our customers and our advertisers? And what Bill Gurley has pounded on, and we've all talked a lot about, there has been in a zero cost of capital world, a unilateral march to more of everything, invest in everything, hire more people. Silicon Valley would do itself a favor. These big companies vacuumed up every single engineer in Silicon Valley. They ought to return that pool to the startups that are actually inventing the future. They don't need this many employees. I mean, last night I read a report, came across Bloomberg, that Elon's talking about 75% reduction at Twitter.
Yeah. So that would leave Twitter, just to give people some context here, that originated in the Washington Post. That would take them from around 7,500 workers to maybe 2,000, 1,800.
And so he's starting from first principles. How many people do I need to build the next generation of Twitter? That's the question. Start with a blank sheet of paper and ask that question. You'll come up with very different answers.
Back to the governance question.
I think that you can correlate these kinds of governance overreaches with zero interest rates. That dog doesn't hunt when rates are at 4 or 5%. I don't care who you think you are, but when you try to go public in over the next 4 or 5 years, if rates are sustained, 3, 4, 5%, that will be the check on all of these people's overreach, because you will have, liquid alternatives that on a risk-adjusted basis seem better. And when rates are zero and everybody was forced to own tech, we all gave up our standards. We all stopped saying, the things that we used to think were important before, like one person, one vote, a check between the board and the CEO, a check between the executives and the shareholders. It all went out the window.
No discipline, no hygiene, right?
Because when interest rates are at 0%, you have to remember, right? How does the structural basics of the financial markets work? It is meant to make money on behalf of every single entity and person and thing in the world, from a pension fund to a university to a research lab to a government to an individual. But in that ability to make money, when we took interest rates to zero, 40% of what we all used to own, bonds, yielded nothing. And so we just completely whipsawed to the other side and said, we need to own anything that grows. So tech got a disproportionate amount of attention, but in that we lost our standards. And we are now going to go through the hangover of dealing with it. And so, Snap will be an example of where investors are going to abandon that company.
They have.
Because it's just, there's no point. There's no governance. There's no ability to have a conversation. It's in the too hard bucket. So people will just leave it. It'll be stranded and it'll be a refugee in the public markets.